In this video, I'm going to show you a beginner-friendly trading strategy looking at reversals on small time frames. I trade the US indices in the New York session, so in this video, I'm going to be showing you an example on the US 30. This strategy uses a risk to reward ratio of 1:4, and like with any new strategy, I would always suggest practicing on a simulator before going live. So my recommendation would be to watch this video until the end, and when you have the strategy rules, log on to your Thinkmarkets account, head over to the Trader Gym and use the trading simulator to practice this strategy first. Now we're going to head over to Thinkmarkets and I'm going to show you the strategy rules. So this strategy is a reversal strategy on small time frames which uses two confluences. I trade it on the US 30 and the NASDAQ and the New York session, but what's really important is if you're trading a different market, make sure you're trading it in the session that's right for that market. So you don't want to be trading a market in a session where it doesn't move. The Dow Jones and NASDAQ are American markets and therefore they typically make their move in the New York session. But if you're trading a market which typically makes its move in the London session, you're going to be looking at a different time of day. Ultimately, you're looking for the market to make a move in the opposite direction to your directional bias, and then you're waiting for it to change momentum in the direction of your bias. So say, for example, your directional bias was bullish and you believe that the market was going to make a move up. You're waiting for the market to make a move down first, and then you're waiting for two confluences to give you confidence to enter into a trade in a buy position. Similar to the one we've got up here, this is the sort of trade we're looking for, and I'm going to show you how we got this one. So the two confluences that we're going to use are Heikin Ashi on the 5-minute chart and normal candlesticks on the 1-minute chart. It's really important that both confluences are met, but it doesn't matter in which order they happen. We're entering on the second one. So we're looking at the US 30 at the moment, and what we're looking for is a buy position. So we're waiting for this move down here. And then when the move down happens, can you see that there's almost like a little gathering at the bottom as it changes direction? You want to mark up the highest point of this. So I've used the horizontal line tool to mark up the highest point. On Thinkmarkets, along the left-hand side of your screen, if you go to Trend Line Tools and click here, you can find the horizontal line tool here. If it's one of your favorites, you can star it and then it'll appear on the screen at all times. I'm just going to take this off for now. And then I'm going to show you the second confluence, which is on the 5-minute chart on Heikin Ashi. So Heikin Ashi, as you can see, looks similar to normal candlesticks, but it uses a slightly different formula. This formula smooths out the appearance of the trend so you can gauge momentum. Like with any moving thing, when a financial market changes direction, it takes a lot of energy to change direction. So you want to be going where there is momentum, and you don't want to be entering too soon into a reversal, because sometimes it can be difficult to distinguish between a pullback and the start of a reversal. So Heikin Ashi is really helpful for that. Can you see these candlesticks, which look slightly different to normal candlesticks? Bullish momentum can be gauged by these candles that are green. They've got a flat base and they've got wick at the top. Bearish momentum candles have got a flat top, they're red, and they've got wick at the base. Indecisive momentum candles can be either color. They've got wick at the top and at the base. Can you see that during a pullback and at the start of a reversal, you get indecision candles? Therefore, it's really important that you never make a decision on an indecision candle. We're always waiting for momentum to change direction or be in the direction of our bias before entering into a trade. So in this example, we saw the market made a move down. We saw the little cluster got formed at the base of the trend, and we drew up our line, our horizontal line, to show the top point of that cluster. The next confluence is we want the market to change momentum to the upside. That means we're waiting on the 5-minute chart for Heikin Ashi to change to bullish momentum from indecisive momentum. It's really important that this is used on the 5-minute chart, because I'm going to show you on the 1-minute chart, Heikin Ashi does not work the same. On the 1-minute chart, you get lots of candles showing a momentum change when the market is actually still in a strong trend. That's why we don't use it on smaller time frames. You see here in the middle of this uptrend, when there was just a pullback, it showed us the market had actually changed momentum. We can also see them along here. During pullbacks, we see momentum changes. So it's really important that Heikin Ashi is used on the right time frame. In this strategy, we use it on the 5-minute chart. So this candle closed at 7:05. And if we go back to the 1-minute chart on normal candlesticks, we can see that this long-bodied candle closed above the highest points of the range at the bottom of the downtrend at 7:02. These are the two confluences we're looking for, but the Heikin Ashi 5-minute candle closed second, and therefore that is the one that we're entering in on. So we're entering into a trade at 7:05, which means that when this candle closes, that is when we're entering into a buy position. So I'm going to take the long position tool and I'm going to go to the end of that candle when that candle closes. This strategy uses a risk to reward ratio of 1:4. When I'm trading the US 30, I will typically use a stop loss of 30 points and a take profit of 120. But if you're trading a different market, you'll need to adjust that. So can you see this trade has a nice risk to reward ratio? It didn't actually use any of the margin here for the stop loss, and it went almost straight into profit. So now that you have the strategy rules, you can head over to Thinkmarkets, go to the Trader Gym and practice this strategy yourself on the trading simulator. If you like this video and you found it helpful, then make sure you hit subscribe and the bell button so you don't miss any of our future videos.